Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 33. Today our guest is Scott Trench. Scott is the Vice President of Operations at BiggerPockets. He is passionate about personal finance, financial freedom, and real estate investing. Scott is the author of Set for Life. Scott started building his real estate portfolio by house hacking his first duplex in Denver, Colorado. He has since expanded his real estate through small multifamily properties. Outside of real estate investing, Scott enjoys biking, rugby, and exploring Colorado. Scott prides himself on his Hawaiian shirt collection, and he has one rule when wearing a Hawaiian shirt. That is, you get only one button. It doesn't matter where, but you can only button one button. Today I welcome on the show, Scott Trench. Scott, thanks for joining us. How are you doing?
I'm doing great. Thanks for having me, Jacob.
Absolutely. So Scott, could you tell us a little bit about yourself and how you got started investing in real estate?
Sure. So I am the Vice President of Operations at a company called BiggerPockets.com, which is a real estate content hub and social network for real estate investors. I am a landlord myself. I've got about 8 units. I've got exactly 8 units, and I am the author of a personal finance book. So I'm really interested in the cross-section of personal finance and real estate investing. I think that there's a really powerful tool to help employed individuals seek and then achieve early financial freedom, in a decade or less.
Awesome, Scott. Well, you got a relatively early start in your real estate investing career, stemming from your passion in personal finance. So could you talk a little bit about what exactly it was that drew you to real estate investing in the first place? Yeah, awesome. That's great, Scott. So you've got a kind of an early start in your real estate investing, and it was kind of driven from yourself or your personal finance, that is. What kind of drew you to real estate investing?
Sure. So I started out of college in 2013. I graduated in 2013, and I spent the summer in Europe playing around. And then I came back and started my work with nothing, $3,000 in my checking account. And I was like, within 3 months of starting work, I was like, this is not what I want to do with the rest of my life. This is not a very fun environment. I was a financial analyst at a Fortune 500 company, crunching spreadsheets in my dusty cubicle. So it didn't take me very long to figure out, hey, if I stick at this another 30 years, I could be doing the exact same thing, but in a meeting over there in the VP's office. And that was not how I wanted to spend that time. So I began pursuing not real estate at first, but the concept of financial freedom. And the ideology that stuck out to me most at the time, and an ideology that still sticks with me a lot, is one from a guy called Mr. Money Mustache. It's about saving your way to financial freedom, which is a very powerful concept because you can reduce your expenses, you have more to invest, you can exponentially increase your income. There's a lot to be said for that. So I was really interested in financial freedom and began applying that for the first year out of college. I can't really buy real estate when you have $3,000 to your name, very little credit, and just starting out in the corporate world. Some people can, of course, but for their typical employee, that's a pretty difficult route. So it was after that first year that I began becoming interested in real estate because I then had $20,000 with which to invest. It's a sizable chunk of money. And I was like, how do I make the biggest improvement in my life towards financial freedom with just $20,000? And the option that appeared that made the most sense to me was this concept called house hacking, which is where you move into a duplex or triplex or quadplex or even a house with extra bedrooms. You move in, you rent out the extra space, and make sure that rent covers your mortgage payment and any expenses. So that's exactly what I did. I used my $12,000 of that $20,000 I saved up and put 5% down on a $240,000 duplex. I moved into one half of the duplex. Each side was 2 bed, 1 bath. I got a roommate for $550 in my side, and I rent out the other side for $1150 to some tenants. So total, I'm collecting $1,700 a month in rent, and my mortgage on this property was $1,550. So I'm collecting about $150, and then, of course, there's expenses and maintenance and all that. So I'm probably breaking even after all this. And again, I forgot to mention, I probably put in about $8,000 in total repairs over the course of several months getting this property fixed up, which I did most of myself, but hired some things out. So anyways, go ahead.
Sorry, I was just going to say, last week we had Ben Leibovich on, and he discussed luxury house hacking. I know he's a big friend of BiggerPockets and Brandon Turner there with you guys. So, yeah, just going to say house hacking is a phenomenal way to get started investing. So, yeah, continue telling us a little bit about that duplex and how it's panned out for you so far.
Yeah, absolutely. I think that house hacking is a spectrum, just like anything else. You can house hack in a very fancy place in a nice area, and you'll get one return, or you'll get at least one cash flow. You might have a better shot at appreciation, but less cash flow. Or you can do kind of what I did and live entirely for free in the duplex. And I certainly could have lived in better circumstances. I could have had a more fancy apartment closer to downtown. But I made that choice, and that choice allowed me to live for free. And I've basically accumulated probably well over six figures from that first deal as a result of I believe, because of that choice.
Yeah, and by that you mean just like you're saving money on your cost of living, not paying, mortgage or rent or whatever that might be, right?
Yes, exactly. So, sorry, what was your question about my house hacking there?
So I was just asking how your duplex is going now. Are you still living there, or do you still have it in your portfolio?
Yes, I still have that duplex. I moved out about 15 months later through the combination of the work I did to improve the property and the local market improving. I was able to refinance out of that because I have an FHA loan. And an FHA loan comes with mortgage insurance because I put down only 5%. So I'm paying this extra $250 on top of my principal, interest, taxes, and insurance because I used a 5% low down payment loan instead of a 20 or 25%. So I refinanced because I had built equity over the course of those 15 months. I refinanced out of that FHA loan, and I had a higher interest rate but no mortgage insurance. That saved me about $150 per month in cash flow, and now my mortgage is about $1,400 per month, and my rents are about $2,600 per month here in 2017. So I'm collecting nice cash flow every month from that property. Most months it's $1,200, maybe $1,100 after some of those recurring expenses with utilities, and then of course I'm sure I'll have some turnover and some repairs and stuff coming up, but I've got a savings account set aside for that, and it's a solid little cash flowing property. I moved into a second duplex after that, which is where I currently live, and then I just bought a new quadplex actually a month or so ago.
Yeah, that's awesome, Scott. That's, like we mentioned, just a brilliant way for people in a position like yours or I to get started investing in real estate. And you mentioned that you'd built up a lot of equity in this property before refinancing and moving out. But what you really mean by that is those tenants built up the equity for you, because you're living there for essentially rent-free, breaking even almost, and those tenants are paying your principal interest for you. So
absolutely. The equity was a combination of three things. One, I'm paying down the mortgage. Two, I improved the property and fixed up parts of it. And three, the market appreciated, the general desirability of the neighborhood appreciated. So all those things helped me out.
Awesome, Scott. So you were able to buy a duplex, fix it up, house hack it, refinance it, and then buy a second duplex, which you moved into. And then since you've bought a fourplex. So can you talk about what those other properties are looking like and how they're working out for you?
Yep, I think that life should be exciting, but business should be boring. So my rental properties are all 1950s builds. They all have 2 beds or 1 bath, or 2 beds or 1 bed, 1 bath. They're all remarkably similar. They're in similar parts of town, kind of these transitioning neighborhoods, or neighborhoods that I believe will be transitioning. They're as vanilla as it gets, I believe. So that's what I'm going for with those guys.
Yeah, right, Scott. So I'm sure you're like most people in the sense that you were taught to go to school, get a good education so that you can get a good job and work until retirement. Once you did that, you found yourself in the workplace and then had second thoughts about it. Realized that you couldn't see yourself doing that job 30 years down the line. So you became interested in things like personal finance to search for other options. When you were doing that, along that journey, What made you settle on real estate investing as your path forward, as opposed to maybe becoming an entrepreneur, starting your own business, something of that nature?
Well, so here's the deal. If you want to achieve early financial freedom, that means you have to generate cash flow in excess of your expenses, and you really have to have a pretty solid margin of safety, right? With the path I was on right out of college, and that I quickly moved away from, was this path of accumulating all of my wealth into a 401k, saving. That would be my 10% of savings would just go into the 401k. And then eventually, after 5 or 6 years in the workforce, I'd have enough to buy a home. So if I'd continue down this path, and this is a path that most Americans in the middle class take with their lives financially, almost all of my wealth would have been in a 401k and in home equity in a personal residence. When that's the case, you're trapped. You're not going to harness a 401k or home equity in the pursuit of financial freedom. And I believe that in order to really begin making significant strides in the direction of financial freedom, you have to just slog it out and accumulate. I'm throwing out a round number here, $100,000 or something significant like that, and throw it down on an after-tax investment like a quadplex, right, or a duplex, and then you're generating $500, $1,000 a month or more in cash flow. And once you start doing that, this quadplex I just bought, this is not an annoyance. This is not 20 grand. I don't go out and make $100,000 or whatever it is that the upper middle class American makes, and then put down $20,000 to get $200 a month or $100 a month in cash flow in a property that's going to be a pain in the butt. I have $1,500 a month coming in over above the mortgage, $1,000 at least in cash flow coming from this property if I self-manage. That's a significant investment, and that's really hard. It's really hard to get in position to produce that kind of passive income. It takes a lot of saving. It takes a lot of hustle. It takes being smart. It's a combination of all of these things. It takes a little bit of luck. You have to put yourself in position to get a little lucky and find that great deal when it does come up. That is what I believe is kind of necessary to begin moving towards financial freedom through real estate. Of course, you can get around that by wholesaling or doing a lot of marketing, finding deals, buying way below property value. But frankly, I'm not very good at that, and I don't have the time to do that. But it was much less difficult in my estimation to just start out by saving $1,000, house hack, save $2,000 a month, between a raise and a house hack, and then continue to accelerate that. 6 months later, $3,000 a month, then $4,000, then $5,000. I go regularly now where I'm saving $5,000 a month after tax that I can deploy towards my pursuit of financial freedom, and that's just going to continue to accelerate if I continue to advance my plan. And again, these properties are significant. They're not $100 a month at a time, $200 a month at a time. And I think I might have gotten away from your original question here, but that's what I was thinking about when I was starting out. I was not thinking about how do I put my money into a 401k or buy a home at first. I'm thinking, how do I optimize so I can really rapidly move toward financial freedom and live a very different lifestyle from that which has been promised to middle-class Americans.
Yeah, so you were really looking for the most bang for your buck, and one of the differentiating factors was the cash flow produced by your real estate, that is, to achieve that financial freedom.
Absolutely.
Yeah, right, Scott. Now, in your book, you have a chapter called The First $25,000 is the Hardest. Now, T. Boone Pickens, who's a famous oil tycoon, famously said that the first $1 billion is the hardest. So yours is much more reasonable. Could you talk about what exactly you meant by that?
Sure. So when you and I write and I talk to a very specific audience, and I keep iterating it, but I'll do it again. I am talking to the person who is making $50,000 to $150,000 per year in the middle or upper middle class, right? If that's your household income, then the fact of the matter is saving up that first amount with which to invest is not going to be a function of going out and starting a business or increasing your income on the side, right? It's kind of silly if you're making let's say you're making $80,000 a year. It's kind of silly to go out and drive Uber after work or work a minimum wage job or try to start a business with a totally unrelated skill set that you've never tried before, and use that as your plan to make progress in the immediate term. The one thing that we all can make an immediate impact on over the course of a year or two is our spending. And if you decrease your spending, if you can save 50% of your salary, and you're in that income range, you'll have no trouble saving that first $25,000. But it takes optimization, just like building a business, just like investing, just like these other ways that we achieve financial freedom. And I guess for me, if you're going to build up that first $25,000, if you're going to focus on saving more money, you have two choices. You can cut out all the fun things in life, or you can cut out the big expenses in life. And my philosophy was, where I sleep at night does not have that much impact on my happiness. I don't care if there are people next door in my townhome. You can also call a duplex a townhome. So if I have a townhome and there's people next door, that doesn't bother me. I sleep much better knowing that they're paying down my rent and allowing me to live for free. That wipes out. How much do you think housing as a percentage is of the average American's budget?
Oh, I'd say 30%.
Exactly. It's 33%, right? How much do you think transportation is?
10%?
17%. So
okay.
You're pretty good here. How about food?
I'm going to go another 15%.
Yep, 16%. So you're now at 2/3 of your entire spending bill if you're an average American in those three categories. The remaining third of the pie is going to be health insurance and pensions, entertainment, miscellaneous, cash contribute, like all that other stuff is there. So it seems ridiculous to me to focus on cutting out. This is appeal of real estate, right? With a intelligent house hack, I'm able to expedite the process of accumulating that first $25,000 with which to invest, or the first $100,000 with which to invest, because I can house hack close to work. So I live in a duplex that is within an easy bike ride of this building where I'm recording this podcast, and I do not pay any rent. My mortgage is paid for by my tenants, and I can bike to work. That's 50% of expenses. I'm at 50% savings rate and haven't even started yet with the other expenses. I can go spend way more on the fun stuff, the good stuff in life, if I'm willing to make this change. And that's why that's what to me is the power of real estate investing in terms of getting started down the approach to the pursuit of financial freedom. In 10 years, I hope to have enough properties where I can live in my dream home with a family, however I want to get around, that kind of stuff, and have the cash flow pay for them. But to get started, it's really hard because you have to embrace it with your whole life. All these choices have to be made in terms of where you live, how you get around, what you eat, in order to begin moving toward financial freedom. And then doors begin opening up, and you can optimize your life however you want from that point on after you get past that first hurdle.
Yeah, I really like what you're saying, Scott. Now, I personally like to have an abundance mentality and not try to be frugal and, spend your time couponing and, saving money at the car wash and things like that. But on the reverse, you're preaching, prudent spending on your big ticket items, your housing, your transportation, things like that, so you don't have to be frugal with, the things you like to spend on, essentially.
Yeah, absolutely. I am not a savvy budgeter when it comes to going out with my friends. Getting a happy hour or, skiing, vacations. Those things are not significant parts of, they're significant parts of my budget, but they would not be significant if I was paying $1,000 a month in rent, right? Then the rent all of a sudden, or had, enormous automobile expenses. Those things vastly outstrip any spending I can really do in those other categories if I'm reasonable. Right? And then the abundance comes from this, right? It's ridiculous to attempt to save your way to financial freedom alone, right? Obviously, you're not going to get to, let's say financial freedom for you is $1 million in net worth, right? Obviously, saving $25,000 at a time is an inefficient way to do that. You're just not going to get there very fast. Even if you invested at 10%, 15%, if you're really good. Once you start saving, opportunities begin presenting themselves. Let me give you an example. Let's say that you make $50,000 per year as a marketing specialist 1, right? You know that next year, if you do well, you're going to become a marketing specialist 2. And if you're a marketing specialist 2, you're going to make $57,000, right?
Right.
So that's your best case scenario. Now, let's say that you're offered an opportunity to make $30,000 a year, but with the potential to make $100,000 bonus or $100,000 in commissions, right? One person can take it and one person can't. The person who spends $25,000 per year can take that opportunity and have no fear. Right? The person who has $25,000 saved up and spends $25,000 per year can take that in a heartbeat. That's not even a consideration for the guy or girl that's spending $45,000. That's spending almost all of their paycheck. Do you see how the abundance begins to flow as you optimize your spending?
Yeah, we're talking about the opportunity cost of those things.
Yes, the opportunity cost of buying yourself into an expensive lifestyle is far greater, in my opinion, than the short term. I don't even call it sacrifice. I'm pretty happy with my life. I do everything I want to do. I just don't live in a penthouse suite downtown for $1,200 or $1,500 a month, right?
Yeah, right. So Scott, when we're talking about those people who are looking at making their first investment, but maybe they live in a market where it's not as viable, or the market's outpriced, or maybe they're not willing to take that kind of lifestyle that they can afford in their local market. Are there any alternative strategies that you have seen that maybe you could invest outside your local market?
Yeah, so I think there's two things here with this comment. The first thing is, if you are in an expensive market, and I think there's only 3 markets in the country that really exclude everybody from them, your typical earner, which are New York, Los Angeles, and San Francisco. Most other markets, or many other markets in the country that aren't in and around those areas, you can buy real estate and do reasonably well. So if you're in one of those areas, then you have to understand this is a whole game with your whole situation. You are delaying financial freedom. You're making it harder on yourself because you have to produce more income to live the lifestyle you want by living in one of those markets. If that's the case, then I hope you're making a lot of income. And then yes, you'll have to go out of state, and you'll probably have to hire property management. And you'll probably also have to accept that while you can get high returns there in out-of-state investing, you're probably not going to do as well as the same guy with your same mentality, but all the time in the world, and who's local. I think there's a big advantage to investing locally, in my experience. And if you're in a market that's somewhat reasonable, I would tend to want to explore my own market first. And let me give an example of why this has worked out for me. So 6 months ago, I self-manage my properties. I go there a few times a year. So it's a very high dollar per hour activity. If I hired it out, I'd probably be paying $500 or $600 an hour to a property manager for the amount of work that's needed to be done. So I go to my property, though, and the tenants say, hey, there's some squirrels running around your attic. They they chewed a hole and are running around up there. So they're running around the attic, and I call up the exterminator and the pest control and all that stuff, and hey, how can I humanely get these squirrels out of there? And they say it's $2,000. We're going to patch these holes, we're going to set a trap, and we're going to take them away. And I think $2,000, that seems like a lot of money. So I researched the project, and I go over there, and I complete this project for $180 in materials. I bought some mesh and a staple gun and covered up all the holes, some steel mesh. Mm-hmm. And then I put a trap up, got the squirrels, and took them away. It took me a total of 3 hours on a Saturday, and I came back Sunday to get the squirrels. This was a $600 per hour activity that I was able to complete, and I couldn't get a reasonable quote from any of 6 different pest control companies, right? That is a real ROI that I get to capture as a local investor that the other guys do not. And this is what I believe is such a big, powerful advantage of real estate investing for the little guy that's starting out with little to nothing and working a full-time job, is I can go do that problem. That's not rarely are problems like you have to go right now and fix that problem. And when they are, you call the plumber, right? Or whoever it is that needs, the fire department, whatever it is you need to call to fix that problem. Most problems in real estate are like, this is kind of broken or the toilet's clogged up. Okay, great. I'll come check it out when I get home from work. That's my take on kind of investing out of state. Yes, you can invest out of state. And guess what? I actually plan to buy a turnkey property in a cash flowing market this year to try it out for myself. But I doubt that I'm going to get the same kind of return I can get here by being in total control of my business and self-managing and self-educating.
Yeah, right, Scott. Now, when we're looking at Robert Kiyosaki's definitions of assets and liabilities, Robert says that your primary residence is a liability and not an asset, in the fact that it does not put cash in your pocket every month. Now, you have found a strategy that turns what would be your largest liability into an asset, and this strategy has given you the ability to save and the power to invest that savings in the future.
Yeah, you're talking about speeding up your return. Let's use that duplex I bought. I put down $12,000. Let's call it let's say that you buy a nicer place and you put down $15,000, right? Mm-hmm. And you get a $285,000 loan or $290,000 loan after closing costs and all that stuff. You're paying down that loan by $3,000 or $4,000 a year, right? At first, and on average accelerates,
right?
So that's what's three divided by 15 is 20%. That's a 20% ROI right there, because you're leveraged 19 to 1. Let's say the property appreciates 3%. So now you're at $309,000 in value. Now you've got a $12,000 return because you've got $3,000 in principal reduction and $9,000 in additional equity. That's an 80% ROI. Now let's assume that you were paying $800 a month in rent, and now you're paying $0. Now you get $9,600 on top of that. It's rounded up to $10,000. That's $22,000 return on your $15,000 down payment, and you can do better than that. It is not absurd in the case of house hacking to regularly see returns of 100, 200, 300% on these incredibly low down payments. Now, the reason you're getting those returns is because of the extraordinary amount of leverage you're getting on your money, which is 19 to 1. And yes, there's risk there. But I perceive it as, hey, if that property went down, if one of my duplexes or one of these house hacks that I buy goes down, I can just continue living there, and my tenants will still contribute rent, and I'll still be better off in all but the most catastrophic rent collapses in history than I would as a regular homeowner or as continuing to be a renter. So I think that there's a lot of ways to mitigate your downside, especially if you can be happy living there in the interim. And there's a lot of upside to this kind of strategy. Even an average market.
Right, Scott. And we're talking about 100, 200, even 300% returns. It's almost criminal sounding to people who are not familiar with real estate.
Yeah, it sounds like a scam, right? But it's not. I mean, this is not glamorous. You're moving into a duplex, if you want to get even higher returns, you have to fix up. You're going to have a neighbor. You have to manage them, but that is really the kind of return you're getting in exchange for that effort. And I don't see a way for a full-time employee to achieve that kind of return with that kind of effort. I think that there's certainly ways to make more money more quickly, but they're going to require a lot of effort. They're going to be more like building businesses or taking on additional jobs than the mostly passive investing that is house hacking.
Right. And this first house, it's really just a stepping stone towards your financial freedom. It's not going to, in all likelihood, give you financial freedom right off the bat. But then if you do your second deal, third deal, start to scale this into a sizable portfolio, one day you can hopefully achieve financial freedom. And if you're doing strategies like you've implemented, you can achieve that financial freedom hopefully much quicker than the next person. So could you talk a little bit about how you can scale this real estate portfolio that you're building?
Sure. So I buy the first house hack with my first $20K, right? Over the course of another year, let's say I don't get a raise, but I'm saving my money on rent. I now have, let's call it another extra $10,000 in addition to the $20,000 I saved up the previous year, right? So now I have 30. Well, between that, hopefully some equity, some appreciation, and maybe 16 to 18 months go by, because really not very few people are like implementing this on the dot after 12 months, moving out,
right,
whatever.
Right.
Let's call it 18 months. Now you've got $50,000, right? Which is a big difference from the $20,000 you saved up in your first year, which has seemed really hard, right? Now with $50,000, what you can do is you can put down another down payment on another house hack if you want, or you can consider making purchasing a small investment property somewhere in the country or even in your local neighborhood, depending on prices. Another year goes by, right? You're continuing to live for free. Now you're getting that extra $800 in cash flow or $700 in cash flow from the first place that you were living in. So your cash flow is increased by another $10,000 a year, right? And maybe you get a raise. This does not preclude you from working hard, starting side businesses, trying to do all the other things, taking I like to call them pot shots. If you can take a shot at a new revenue stream every quarter, that doesn't detract from your overall holistic, real estate or investment plan, whatever you're trying to do, great, by all means. You only need to get lucky once and build your, a few $1,000s a month, and you've got a great new stream. So you can keep doing all of those things. And let's say something works out and 3 years go by and you're now able to accumulate 75 to 100 grand. Well, now you're in the game. Now you are literally sustaining $50,000 to $75,000 to $100,000 per year in cash generation after tax in your bank account that you can begin throwing down on significant investment properties. And each one you buy, you can take small investments. You can pursue opportunities with increasing rapidity, and the snowball begins working. That's what I'm trying to communicate: is you're not saving and house hacking and living this, biking to work so that you can live a pauper's life forever. You are saving up that money so that you can begin to exploit opportunities very quickly and build up a strong passive cash flow. And if you're like me, you'll just like living efficiently anyways. I don't think I'll ever spend a lot of money. I enjoy my simple lifestyle, my bike ride to work, my rugby, my time with friends and family.
So we're talking about growing your portfolio to a sizable enough passive income stream, which will give you financial freedom. So by compounding your cash flow, appreciation, and experience from your first deal to your second one, and so on, you're able to grow your portfolio exponentially. So let's talk about how this relates to compound interest. Albert Einstein said that compound interest is the eighth wonder of the world, but I would argue that leveraged compound interest is actually more powerful. By leveraging the bank's money, you're able to buy a property with a small down payment, and then you leverage your tenants' time and money to pay back that loan and continuously learn and scale your business. So through this leveraged compounding, you're able to develop real wealth and financial freedom for yourself.
Yes. And so I think this is a great point. So the house hacking is so great is because you can use that compounded leverage to get the ball rolling at first. But then once you kind of get further along, like at this point in my life, I have several $100,000 in assets and several $1,000s per month in passive income. So I'm still at this point where it's nice to get a 200% return on 12, 15 grand, right? But I can't really get a 200% return on 200, or some people definitely can do that. But I think that it's a little more difficult. I don't see a strategy that's very repeatable for investing 200 grand or 100 grand and achieving a 200% ROI. If you find one, let me know.
Right.
But so now it's like, okay, well, I can buy a rental property, and I'm happier with a 20% return on a $100,000 investment than a 100% return on a $12,000 investment, if that makes any sense, because the scale is now starting to come into play. So am I making sense here? The ability to continue to generate wealth exponentially diminishes as you begin accumulating hundreds of thousands of dollars in wealth. And that's a good problem. That's a problem everyone wants to have, I think, right? But that's part of the deal there. And you can still sustain these high returns of 15, 20, 25% if you're a do-it-yourself, hardworking real estate investor.
Yeah, right. That goes back to what we were kind of saying is you're getting a lot of bang for your buck with these first couple deals. You're really seeing magnified returns, and you're really getting that needle moving.
Mm-hmm.
All right, Scott. Well, you're building a real estate portfolio for yourself. You're on your way to financial freedom. Why are you doing this? What drives you? What motivates you?
Oh, so my thing, the reason I love real estate is because real estate, I have a bunch of other projects that I work on. I'm a real estate agent. I've got this book that produces income. These things are not going to produce income in perpetuity. Real estate will be around regardless of whether I'm able to work or not, regardless of whether I, grow old. Land and the structures on it, people will always need places to live. I consider real estate income to be the safest thing. And I also believe that the strategy I'm employing will allow me to just continuously and almost automatically build additional wealth over the years. So here's an example of what I kind of tentatively plan to do. I'll buy one property per year over the next 4 years, and then I'll have 7 properties at the end of this. The value of that portfolio will be somewhere between $3 and $5 million, and the equity in that portfolio will be between $1 and $2 million by the time that's done, depending on how things go. Once I get to that point, I'll sell off the first place, and I'll use a 1031 exchange and buy a bigger, nicer place that generates more cash flow or has better prospects. The great thing about this kind of approach in my model, again, real life may work out very differently, is I don't have to work that hard. I have to put in a little bit of effort every year, every 18 months, however often I want to buy these things. And I'll have a portfolio that remains reasonably leveraged, but also has these deleveraging properties that produce cash flow to make sure the whole thing's fairly stable. And I think I can just continue to roll that plan out until I die, 80 years from now, hopefully, and I'll have an enormous estate that I don't, I have to pay attention to and put some work into, but not nearly a full-time job, and something that will last for generations. And that's kind of what I kind of want to do. Is I don't see any reason not to deploy that strategy and then use that income to give back to the world. And the way I give back to the world is I love this topic that we're talking about, if you can't tell. And I want to help as many people as possible achieve financial freedom for themselves, because as you move toward financial freedom and as you achieve financial freedom, opportunities begin to multiply for you to do whatever it is you want to do, impact the world however you want to impact the world, just do good and make a difference. And I think that is what the game is all about. And you're just in such a much better position when you're financially independent than when you're behind the desk of an employer that you wouldn't go to if you were financially free.
Yeah, Scott, you're talking about wanting to help people out and teach people this topic, but you really have to be able to help yourself out before you can help others out. So,
absolutely.
Now, one of those things I like what you said is essentially you don't have to reinvent the wheel with real estate investing. It's not a new thing. You can, implement strategies, pick up things that are working for you, learn from others. It's a very systematic type business.
Yes, if real estate investing was difficult, I would not be in the business. And that's not to say real estate investing is easy, but it is much easier than becoming an entrepreneur. I could not build, I'm sure we can all do anything we want, but it seems to me it's a lot more difficult to build an income stream that generates $3,000 a month passively from a business perspective than through real estate, at least for many people who aren't entrepreneurs and don't have that skill set. I'm in this game because I believe real estate is is a very semi-passive business that can be turned almost completely passive over time, and because I believe that is one of the easiest ways to build wealth efficiently that we have.
Yeah, right. So, Scott, what would you tell those people who are maybe young professionals and have this $20,000 of savings saved up, and they're looking at their next investment opportunity, and they're considering the differences between real estate and stocks? What advice would you have for those types of people?
Okay, so I have strong opinions on this one too. If you are investing in stocks with $20,000 and you're spending a lot of time picking winners and that kind of stuff, I believe you're wasting your time. And the reason I believe that is because, first of all, there's just an enormous body of evidence showing that almost nobody can consistently outperform the market in terms of their stock picking. And the guys who can are often very well compensated fund managers, that kind of stuff. Even those guys are apparently not able to beat the stock market after their fees and stuff. So let's say that you are the exception and you are able to beat the market by 5%, right? 5% on $20,000 is how much? $1,000? So you've just made $1,000. How much effort are you going to have to put in to your research and stock trading in order to make that $1,000 in excess return rather than what the market provided?
And keep in mind that $1,000 is an annual return, so spread over the course of a year, which is really not that impactful to your bottom line.
Yeah. So first, the two problems here are, one, you're probably going to have to put in a lot of research in order to get that return or sustain that return, and two, the odds of doing that are very, very low. In contrast, with real estate or particularly a house hack, you do increase your odds with every bit of self-education you absorb. You do increase your, I increase the odds of success and therefore the ROI of my business every time I read an article about how to effectively screen tenants, or what makes an optimal lease, or what's the most efficient way to turn over a property, or how much should I charge for pet rent? What's reasonable there? Or every time I meet somebody or network or read or discuss the topic in general, I increase the odds of success with my real estate business, and again, therefore, the ROI. So that is how I believe you can actually sustain much higher returns in real estate than you can with something like stocks. That said, if you buy a house, if you just take an average house out of the blue, and then you plop a tenant in it at market rent, you probably underperform an index fund or stock fund investment over time, because unleveraged real estate produces less return than the stock market. So it's really this combination of intelligently using leverage, knowing the math, running your financial models, and then self-educating so that you're practically speaking, able to run your business efficiently. And if you're able to do that, that's when you're able to sustain these returns. And that's a lot of work, but I'd argue that you have much higher odds of realizing ROI from that work in real estate than stocks. And obviously I'm biased. I work here at BiggerPockets, but that's my point of view, and that's what I'm doing.
Great. Yeah, I couldn't agree more with what you're saying. The returns you see with stocks, like you said, the average person really doesn't beat the S&P 500 over the course of time. And you kind of have a unique perspective in the fact that you started your career as a financial analyst. So somebody that probably has a little more insight than your average 23, 24, 25-year-old. And so it's kind of unique to hear you saying that, because I have some friends who work in the finance arena, and I feel like they've got a little I know better than you mentality when it comes to...
Dude, it's absurd. These guys, they manage these like Fortune 500 businesses. They analyze them with billions of dollars in revenue, and then they talk about their, I put 20 grand into Google and it went up to 40. Okay, great. You also invested in these 5 losers. You don't talk about them. I know you did it though, because you were talking about them previously. Like your whole portfolio, you probably did a 10 to 15% return. Are you going to be able to do that next year? It's just like, you're absurd, here. Or you can go talk about, hey, I've got a $1.2 million real estate portfolio with 3 or 4 properties in many cities around the country, and that's generating thousands of dollars per month in income. And no, I'm not going to make a 40% ROI next year, but I'll solidly sustain a 15 to 20% ROI and every day progress towards more and more wealth. I think there's just like a different. I found it a little absurd to be talking about the stock investing and these returns from people's cubicles when that was obviously not going to produce a significant, life-changing financial result for them in a short amount of time.
Yeah, right. Now, Scott, you've touched on a few key principles here that you go into further detail in your new book called Set for Life: Dominate Life, Money, and the American Dream, which is available on Amazon. We'll link that book in the show notes for their listeners so they can find it. Now, Scott, as we're wrapping up here, we've got a series of lightning round questions for you. Are you ready?
Yeah, go ahead. Let's do it.
Okay. Our first question is, what was your biggest hurdle getting started investing in real estate, and how did you overcome it?
My biggest hurdle was saving up the down payment, and how I overcame it by living frugally, packing lunch to work, biking to work, and just generally optimizing my savings. I did not live in the fancy part of downtown. I lived closer to work in a more reasonable place, and when I wanted to go downtown and hang out with the boys, I took an Uber.
Yeah, so. Perfect. All right, great. Do you have a personal habit that contributes to your success?
Yes. So every single day, every year, I set out my goals for the year. Every quarter, I set out quarterly goals. And then I plan out what I'm going to do over the course of the next several weeks, 12 to 13 weeks. Then I do my weekly, I have a weekly log where I measure my productivity on a weekly basis, and I plan out what I'm going to do that week. And then I have a daily log that I fill out every morning that has, hey, here's the actions I'm going to do, here's my gratitudes, here's who I'm going to reach out to or communicate with today, like Jacob today, and here's what I did when I did it, and any reflections on the day. I just did it every day. It takes me a couple minutes, and I always get done at least the few most important things in the day, and often much more.
Yeah, right, Scott. The habit of writing your goals down every single day is simply the most effective way to achieve whatever it is you want. I've personally been writing my goals down every day for a couple years now, and it's helped me tremendously.
Yeah, and just taking an action every day to move toward it and tracking it. You don't have to be perfect. I don't do something. I'm not perfect with my habits, but I certainly am better than most because I every day revisit them, and every day I'm like, oh shoot, I didn't do what I wanted to do today. I need to do better tomorrow. And just that path keeps reorienting me on the right path.
All right, Scott, do you have an online resource that you find valuable?
So I work at BiggerPockets.com, and so I'm going to plug them. But that's where I was learning about real estate investing prior to getting into real estate investing. Prior to working here, I was a big fan. I think it's the best resource around for learning how to invest in real estate without paying hundreds of dollars for a seminar, thousands of dollars for a course or something like that. If you want something that's not where I work, I would recommend Mr. Money Mustache. His blog is full of great information. He's a guy retired at 31 through frugality. There's a great perspective on life and finance, and he's really an abundance mentality, but he gets there through living so efficiently. And I just think it's a fantastic way to approach life and it shaped my view.
Great. All right, Scott, what book would you recommend to the listeners and why, aside from your book, Set for Life?
So I'm assuming that your listeners are going to be into real estate investing.
Right.
You know what? There's a lot of great books in real estate investing through BiggerPockets. I'm not going to plug this. I'm going to go with a independent book, which I'm going to go with The One Thing. The
Good.
One Thing I think is kind of what shapes my goal setting, and that I'm going to go with The One Thing and then another book called The Compound Effect. So The One Thing is a very famous business book. It's one of the best sellers in the world right now, by Gary Keller and Jay Papasan, and it's about how to identify the one thing that's most important and move forward with that. And it's just a very great read. The other book I want to recommend is The Compound Effect by Darren Hardy. And Darren Hardy's a bit of like a success guru, but I love the book anyways because it talks about how these little things you do each day compound over time. You can't tell a difference between, me and the other guy who's not saving money for the first year. Nothing looks different on the outside. I'm driving a worse car, packing my lunch a little bit more, living in a house hack. You kind of see these things, but you don't understand what's going on beneath the surface. 2 years go by, another duplex, same deal, still doing the same thing. 3 years go by, same deal. 4 or 5 years go by, okay, now we're dropping $100,000 at a time on a rental property. Now we're making huge business moves. Now there's no comparison, and that's the compound effect that's at play. Is that you can't really see what's going on beneath the surface, but you see but the changes all of a sudden become insurmountable.
Right. Okay. Great. All right, Scott, if you were to give advice to your 20-year-old self to get started in investing in real estate, what would it be?
At 20 years old, I was in college. So I probably, as a senior, would have figured out, hey, how do I do college exactly right and leave college with a cash-flowing real estate asset? And so what I would recommend is go buy a house with extra bedrooms, or even a frat house near campus, and rent it out to your buddies and have a good time. Continue, you study hard, have fun, do the college thing. And then once you leave, rent that out to the next generation of college students. And just keep that. And you're house hacking in college, and you've got this asset that will help you tremendously once you get into the real world. So
Scott, that would be I bet you wish you would have done that, and I know I certainly would have. So
yeah, it would have been great. I could have done exactly what I wanted to do all of college. It would have not impacted my life one bit negatively. It would have been positive impact, and I'd have that would have been the move.
Great. Oh, great. All right, Scott, we're wrapping up here. Where can our guests find more about you?
You can find me at BiggerPockets.com. You can just search in the search bar for Scott Trench, and you'll see me. I'm pretty responsive there. My email and phone number and all that stuff are right up on my BiggerPockets profile, so feel free to reach out. I am always down to chat personal finance, and if you read the book, I'm always down to discuss thoughts on that. I will probably ask you for a review on Amazon once you have read it, but I'm very responsive. So.
Yeah, of course. Okay, great. Well, Scott, that book is Set for Life, available on Amazon, and you can be found at BiggerPockets.com.
Absolutely. Thank you.
All right. Thanks, Scott. Take care. All right. That wraps up our episode today with Scott Trench. For more information and resources, check out the show notes. You can find those at www.jacobayers.com. As always, if you have any questions or comments or want to hear something or someone specific on this show, reach out to me and let me know. You can contact me at www.jacobayers.com, email me at info@jacobayers.com, or connect with me on Facebook at The Real Estate Way to Wealth and Freedom. Till next week, signing off, I'm your host, Jacob Ayers.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.